My name is Dawn Gonsalves, and I'm going to talk about business budgeting. I'm a certified public accountant with an MBA in business organization and management. I have 10 years of experience in public accounting and currently provide accounting and tax preparation services to all types of businesses and individuals. I've been a small business owner for many years and am currently the Chief Fiscal Officer of a Florida nonprofit organization. In this presentation, I'm going to go through the importance of budgeting, how to develop a budget, and how to set prices for your services. Then I'll demonstrate how to use a budget in an Excel-based spreadsheet that I will make available for you to use. If you're not currently using a budget, whether in your personal life or your business life, this could be the perfect time to start. Because of current inflation, prices of supplies and gas have gone up, which are more than likely affecting your personal and business life. You may be seeing fewer patients if they are feeling the pinch, which causes a decrease in the funds available to support yourself and your business. A budget actually helps you do more with the money than that you have. Let's be honest, when you operate your finances without a budget, you don't really have anything holding you back from spending beyond your means. Sure, you might have a general idea about how much money you can spend each month, but without hard, accurate numbers, it's easy to lose control of your spending habits. I would know, before my husband and I started budgeting, we spent money like it wasn't a big issue. From going out to eat to taking trips, without a budget, it was hard to correlate our daily spending to our less than optimal financial situation. I mean, sure, buying one lunch out to eat at a time doesn't feel like a big deal in the moment. However, when you sit down with a budget and add up the cost of 20 lunches each month, those seemingly insignificant lunch bills add up to way too much spending. In other words, budgeting is important if you want to keep a close eye on your daily spending habits, understand the impact of seemingly small expenses, and take control of your spending. There are many benefits of creating and monitoring a business budget. It allows you to manage your money effectively and control spending. It helps to allocate appropriate resources to projects and prepare for emergencies. It allows you to monitor your business's performance and stay on track. It helps to meet your objectives and find financial contentment. And it improves decision-making and keeps you organized. It allows you to identify problems before they occur, such as the need to raise capital or to see cash flow difficulties. It helps you plan for the future without feeling financially overwhelmed. A business budget isn't just busy work. It not only helps you project annual expenses, but it lets you see costs as they occur. A budget lets you project your utilities, marketing, rent, wages, and other costs so that you can learn the true cost of delivering your service. Once you know this, you can set your prices to make the profit you want. If this price is too high for you to be competitive in your marketplace, you can use your budget to identify areas where you can reduce your costs so that you can reduce your price or develop other ways to produce revenue. A budget lets you track your business's performance throughout the year, allowing you to make necessary changes to control costs or increase spending to take advantage of growth opportunities. If your marketing is effective, a budget will let you know if you have funds available to increase your advertising to grow your sales. If your sales are slow, a budget identifies areas where you can cut discretionary costs to make you more competitive or tide you over through slow periods. Along the same lines of controlling your spending, budgeting is important because it keeps you on track when you're trying to achieve your financial goals. So, setting goals is pretty easy. Anybody can do it. You just think of something that you want to achieve and then set a defined timeline to achieve it in. But here's the thing, setting goals and actually achieving your goals are two very different things. In order to achieve a goal, you need to stick to a plan and stay focused on a clearly defined process. And that's where having a budget is so important. Through a budget, you can reverse engineer your goals and develop a clearly defined process to achieve them. In essence, when you create a budget, you're setting boundaries on your financial behavior so that you can stay on track and achieve every goal you set for your life. Additionally, whenever you sit down to log your expenses into your budget, you're essentially recommitting to your goals. And I can tell you from a personal experience that the more often you commune with your goals and assess your progress, the more likely you are to achieve them. So how do you take that first step in developing your budget? Before determining what amount to charge for your services, you need to develop a budget in order to know what your expenses will be. And there are different methods that you can use to develop and track your budget. This can be easily done in an Excel spreadsheet, or you can purchase a software such as QuickBooks, which easily handles not only your expenses, but can be used as a database to store client information and also handles invoicing. So the step one in developing a budget is to determine your fixed costs. Your fixed costs are any expenses that stay the same from month to month. These include expenses like rent, internet services, telephone, website hosting. And if you're just starting your business, use projected costs. Just do a little homework and find out what the average monthly cost for some of these things are. Step two is to determine your variable expenses. Variable expenses will vary each month based on your business performance and activity. When your profits are higher than expected, you can spend more on the variables that will help your business grow. But when your profits are lower than expected, consider cutting these variable costs until you can get your profits up. Step three is to determine on-time spends and just-in-case spends. Maybe you have plans to purchase a piece of equipment, pay for some special licensing, or some other expense that will only take place once. You should be prepared for rainy days and emergencies by setting aside money for it. Step four, you put it all together and that creates your projected profit and loss statement. This is where you may have to cut costs or somehow increase your income. Step five is to make sure you track what your actual results are. This practice will help you set goals about your performance and then see what happens in reality to give you the roadmap of where you need to take your business. Once you start seeing patterns in income and expenses, it'll be easier to make projections. Write your plan and work it. With time, the practice of projecting and then analyzing your actual performance will help you see what's really possible, where you may need to improve, and what weaknesses you might have. Real data helps to make more realistic and attainable goals. So one of the trickiest parts of running your own business is deciding how much to charge. If your services are too high, it'll be a deterrent for patients. If you ask too little, you risk having potential patients think that you're cheap or inexperienced. So your price equals your costs plus your profit margin. So we'll go over what that means. The first step in determining pricing for a service is not only to determine whether you will be charging a flat fee or an hourly rate, but also what your expenses are and how many hours you plan on working, or how many patients you anticipate seeing. So first, do some homework. Research how much your competitors are charging, what they're providing for that cost, and also how experienced they are. After researching what local practitioners are charging, try to decide where you want to fall along the spectrum, taking into consideration your skill level, your experience, and your reputation. Next, determine how much you want or need to make each year and add this to your overhead. Your overhead is your regular expenses that you have during the year. Then choose a profit margin. You're entitled to earn a profit over and above your salary and overhead expenses. Profit is the reward that you get for taking the risks of being in business for yourself. It helps to provide the cash flow to expand and develop your business. There's no standard profit percentage, but typically a 10% or 20% profit is common. So for example, let's go over how to calculate by the hour. So if you want to charge by the hour, there are approximately 2,000 hours in a work year. So that's just regular working hours. So if you want to earn $40,000 for the year and say your overhead expenses comes to $30,000, you would take your $40,000 salary plus your $30,000 overhead expenses, and that equals $70,000. So $70,000 times a 10% profit margin would be $7,000. So that means you want to make $7,000 over and above your salary. So take your $70,000 overhead plus your $7,000 profit margin. That equals $77,000. So you're going to divide that by the work hours in the year. So that comes out to $38.50 per hour. I'll leave this here for just a minute, just so that you can write this down if you want to write it down. But you can always go back into the presentation and come to this page again. But keep in mind, this $77,000 at $38.50 per hour, that might be based on being completely booked on every day each week, which may be next to impossible if you're just starting out. You may find that about 50% of your time is billable, with the other 50% looking for business, managing customers, and taking care of the administration of the business. That means if you still want to make $40,000 per year, you should charge at least $38.50 times 2, because that you're only working half the time. So that comes out to $77 per hour. But if you'd rather charge a flat rate, you would take your overhead plus your desired salary plus your profit margin and divide it by how many patients you think that you're going to be seeing. As it can be really unwieldy to calculate the rate using a yearly client number, divide the total of your overhead, salary, and profit margin by 52 weeks to get a weekly cost of overhead, and then divide that by the number of patients that you think that you'll see during a period of 1 week. So for example, if you want to earn $40,000 per year and your overhead is $30,000, you would add your $40,000 that you want to earn plus your $30,000 of overhead expenses plus your $7,000 in profit and divide that by 52, which is $1,480 overhead per week. If you're anticipating seeing 10 patients during the week, you divide that $1,480 by 10, which means you would charge $148 per session. However, depending on market conditions, you may be able to charge more or you might have to accept less. If a flat fee is charged for various services, bundling services together into a package and then providing a discount may encourage patients to purchase the entire package rather than just one service. One approach is to start out charging a fee that's at the lower end of the spectrum for others performing similar services, and then gradually increase it until you start meeting price resistance. Over time, you should be able to find a payment method and fee structure that enables you to get enough work while adequately compensating you for your services. So now that we know what variable expenses are and overhead and profit margins and how to calculate your costs and your salaries, we're going to go into an Excel program, and I've developed a budget program that can be used for small businesses and personal use. It's easy to use, and I'll make this available for you to download it, and you'll be able to use this for your business. Let me get that up for you. Okay, so this is a monthly budget that I've developed for a business. I actually designed this to be able to plug in your actual every single month for every single day, and it rolls up into an annual summary. And then you also have a tab for budget versus actual. So let me bring you through this. So once you've decided how much you want to charge and how much your expenses are, you would go month by month and day by day and plug these into your tab. So I'm going to go to, it's April, so I'm going to go to April 3rd, and say you made $500 in service income on this date, and then you sold products. Maybe you sold $200 in product. And then if you had other types of income, I don't know what kind of income you'd have, but I've left a space where you can put that in. So then you go down to the expenses. Maybe you paid $50 for a membership today, and your insurance came due and you had to pay $550. Something broke in the office, you had to buy a part. And you just go through here and you plug in, what did you spend that day? So up here is the date. This whole line is the date. So you would just go in day by day and keep track of your expenses. And what that's going to do is, as you go through the months, it's going to roll up into the annual summary. And you can see under April, you've got expenses here rolling up. And so far, you're in the negative for the day because you just didn't have enough clients. But say you go back the next day, you saw several clients, and maybe you made $1,000 today, and you didn't have any expenses. So you can see how it's turning black again. So you can see you actually had a profit for April so far. So once you start keeping track of these, you can actually develop a budget. You can see where some waste is, or you can see the seasonal fluctuations of licensing. Maybe you have to pay for a license at a certain time every year. Maybe you see more clients during a certain time of year than other times of years. But once you've developed your budget, you would go to the budget versus actual tab, and you would start plugging in what you decided that you need to make. So say, for an example, you have to have, say, $70,000 in income. And this would be no, I'm going to back it off. Say 30,000. If you're just starting out, this would seem more reasonable for you. So maybe you're selling product too, and maybe you sold maybe $5,600. So here's your total income. So now you would go down and put in what you projected that you are going to be spending on all of your expenses for the year. So say dues and subscriptions, maybe your spend is $500 for the year. And then you have insurance that you have to pay. Let's see, maybe you pay a bookkeeper. So that might be, say, $50 a month. So you might spend $600 on a bookkeeper. And you may not have any repairs, but you may. Maintenance and repairs could be anything like trash, takeout, light bulbs, anything like that. So maybe you spend $250 for the year. Then you have office supplies, postage, professional fees. That could be anything. You may have somebody that you take into your practice and pay them for services that they do for you. So let's put $3,000. And your rent, say you're spending $400 a month. That'd be 4,800. So you can, as you go down, you can see all of the things that you might have an expense for. And you would just plug everything in. So down at the bottom, though, you want to make sure that your total operating expenses are not increasing over your income. So far, you have a $19,000 profit, which should be good. But I'm going to stop it here. Well, I'll put in if you want to earn something. Let's see. So you can see we went into the negative. So you have to bring in more income. So let's up that to 70,000. And now you have a net profit of 19,000. But you might have other expenses like utilities. You're going to have that for the year. But you can see how this goes. You're gonna figure out what you need for the year for a budget. Add up, if you've been in business for a while, you can go back through your records and add everything up for each month and then come up with a yearly total. But if you're just starting out, use this sheet, make a copy, and use this to set up your budget. You can go month by month and figure out what you need for money to be able to support your business and support yourself. So as we go through and put in the actuals, let's plug in, well, I'm going to just copy some of this to the next month. Oops. So now you can go to the budget versus actual, and you see how the actuals are growing. And this will help you stay on track, because if you end up going over budget on anything, you can immediately react and maybe look at your budget again, and you'll have to cut back on something in order to accommodate that extra spend that came up that you weren't anticipating. So it's just a tool to help you stay on track of it. So that's how this works, month by month. Go through and just plug in what you actually spend. And then it'll roll up to your annual summary. And actually, if you don't use a QuickBooks program or another accounting program, this would be actually helpful for your tax preparer, because you have to give them all of your expenses broken down by category, and this would be done for them at the end of the year. It'd be completely done. And all you would have to give them is this sheet. So it's just a little tool that I came up with. Hopefully it's easy to use. But QuickBooks can do the same thing. You just have to learn how to use QuickBooks. Well, that's all I've got for today. I'll make this available.